Investors Playbook, where we help you get off the sidelines. I'm Cornell Rowan.
I'm Deshaun Edwards, and today, me and Cornell, we're talking about your credit score. All right, we're talking about how we can increase your credit score, the things that affect your credit score. So we're going to dive deep into this conversation. Hopefully, you can take some gems away, but that is today's topic. So, Cornell, I'm going to let you start it off. I know you got a couple questions that you want to roll out.
All right, so before the questions, I know the first thing that I just wanted to talk about is what exactly a credit score is. So I know that everybody knows about credit score, but do they know exactly what it is and how it's calculated? Probably not. So the first thing, credit score is a numerical representation of basically your credit worthiness. Okay, and what's factored into this is your payment history, whether you've been paying on time or not on time. Of course, that affects your credit, your credit utilization, how much of your credit you're using, opposed to how much you actually have available. Your credit history length. How long have you had established credit? Because if it's only been 6 months, it's probably not going to look too good to creditors because you see them as more of a risk. They also consider new credit. As we just said, when you have new credit, they're looking at this as a risk because they don't know how you perform. You don't have a track record. So it's harder for them to see your spending behaviors. And also a credit mix. It's good to have different types of debt, as far as like maybe a mortgage or a car loan, and also credit cards and things of that nature. So what do you think, Deshaun? What is your idea of credit score?
I think for me, a more watered down way, or not even watered down, but just a generic way of saying what a credit score is, or a better way to understand it. You mentioned that it's your credit worthiness, which is, and essentially that's what it is. But I think for me, when you're talking about defining what a credit score is, um, it pretty much tells people, it tells the individual who you're getting a loan from, or who you're getting who you're asking for a credit card from, how much they can trust you, right? It's basically you saying, my credit score is this. This is how much you can trust me that I'm going to pay back the amount of money that I'm asking for, or that you can trust that I will do what I need to do with the credit that you're going to give me. So it's almost like it's a trust system. Your credit score defines how you say credit worthiness. I just say trustworthiness. How responsible you have been in the past years. Your credit score increases as you're more responsible, as you do things like take out loans, pay them back, as you do things like get credit cards and not run them up. So essentially, it's a number that defines how responsible you are, right? To me, you know what
Which
I mean?
which makes sense because related to something like if you have a person in your life, right? And you're asking and they're supposed to do something at a certain time, or you expect them to do something and they just continuously like not do it, their credit is going to go down with you feel me, and you're going to stop expecting them to do that, and you're going to stop relying on them for that. You see
Right.
what I'm saying? So just relating that to real life, so people might not like a credit score, and they might have bad things to say about it, but it makes sense because if you have a low credit score, it is for a reason.
Yeah.
It's, so I do understand that there are special factors where people, which is bad. Parents are using their child's credit, they run it up, and they make it difficult for their child later on in life. And also, we do understand that there are scams where people are utilizing other people's credits. But in most cases, if you have low credit score, we got to take accountability. It's for something that you did in the past.
Exactly. I wanted to hit on something too, though, Cornell, before you moved on to the next topic, because you mentioned all the things that can affect your credit score, right? We talked about like credit utilization. We talked about payment history. We talked about the length of your credit history. I think it's important to understand that all those things don't weigh on your credit score the same way, right? You have some, like recent inquiries. Like if you are applying for a credit card and they say, okay, I am going to do a hard inquiry. People have heard that before. when they're either getting a loan. This is going to be a soft inquiry, or this is going to be a hard inquiry. A hard inquiry is going to affect your credit score. It has a 10% weight on your credit score, which is the lowest of the 5, right? So hard inquiries affect your credit score at of the 100% pie, 10% is going to be affected by hard inquiries. You have 10%, another 10%. So I guess it's not the lowest. It shares it with the type of credit cards that you have. So credit cards, loans, the different types of credit that you have is another 10%. And then the length of your credit history, how long you've been, how long you've had a credit card, how long have you started taking out loans, that's 15%. Then it starts to jump up. Your credit utilization. How much credit do you have access to? That's 30%. And then the highest is your payment history, which is those late payments that you want to avoid. Any type of, pretty much the late payments, right? Late payments, that's going to affect your credit score by 35%. So if you're wondering why your credit score went from like a 720 to like a 680, it's probably because you made a late payment, because that weighs so heavy. And you do an inquiry and your credit score goes from a 720 to a 715, it's because the weight of that that calculation is lower. It doesn't weigh as much as doing a late payment. So just to keep that in mind, you want to avoid those things that are going to have a heavy hit on your credit score. Things like late payments, and making sure that you have enough credit to be considered, have a good credit utilization. So, and that comes with having enough credit and not running that up. I think a good balance was saying that don't let your credit utilization go above 30%. That's when it starts to like negatively affect. So, and an easy number to remember is that don't let it go above 30%, because it affects your credit score at a weight of 30%. So I just wanted to make sure people understood the different things that you mentioned and how they affect your credit score in different ways. Well, it affects the same way, but just different weights, I guess I should say.
Nah, I appreciate that.
Mm-hmm.
Elaborate. So next, can you tell us why credit matters, if you don't mind?
Yeah. I mean, like you and me both mentioned earlier, it defines your responsibility, right? Having good credit can allow you to have access to a lot of other things, most importantly, other people's money, right? It allows you to do things like take out loans at a reasonable interest rate, to take out car loans, home loans, purchase a home, like get a mortgage, apply for more credit cards, increase your credit card utilization, and not get denied or have enormous interest rates that are going to heavily affect how much you pay when you are paying these loans back. Me personally, because my credit score is where it is, when I got my recent car loan, my interest rate on that car loan was 1.3%. I'm basically paying for the car. I'm not. It's like not even really me paying any interest. I mean, of course, it's a tiny bit of interest, but it's because I have a good credit score. Another person applying for that same loan could get the same car, but their interest rate is going to be 5-6%. So they end up paying more money than me in the long run. So having a good credit score allows you to borrow other people's money at lower interest. I mean, it allows you to borrow other people's money just in general, and then at a lower interest rate. So
I'm actually really glad that you said that. Having bad credit is expensive.
yes,
It's
it's expensive, bro.
man. I've seen people out here with double-digit car interest loans, which is crazy.
They
Which
got credit card interest rates for a car loan.
yeah, yeah, and,
Yeah.
and they're happy about these cars. So they driving around with these Mustangs, these Dodge Challenge,
These
like
30, 40K cars, yeah. Paying 12% interest.
right. So and also I've seen where people have to put deposits down on utilities, like your electric bill, your power bill. Yeah, they have to, in order to get hooked up, their power hooked up when they move into a spot, they have to pay a down payment because
Wow.
and also water, things of that nature. So yeah, having bad credit is expensive in more ways than just interest.
Yeah. I didn't know about the utility. I haven't heard about that. That's interesting. But I mean, I'm pretty sure people when people have a will, they have a way. It might not always be the best way, but I guess like you said, not having a good credit score is it can cost you more, right, by not having a good credit score, needing to leverage things that you shouldn't normally have to leverage. When having a good credit score, you can just leverage that. You can leverage your good faith, your responsibility. People who you don't even know, in these cases, other businesses, can just look at your credit score and say, cool, I trust that you will pay this money, or I trust that you'll do the right thing. And if it's low, you got to do things like, leverage whatever you need to leverage for utilities. Yeah, I've never heard of that one before, but I guess it has to happen. So,
And also you need credit for very important things like buying a home. If you're under 600 credit score, 9 times out of 10 you're not even going to be able to purchase a home. So that because it's such a huge debt. Most people are paying their mortgage for 30 years.
right.
So able to trust you to make this payment on time every month for 30 years, you're going to have some good credit.
Hmm.
It doesn't make sense for someone to loan something out to you for that extended period of time and you already have a bad track record with things that take less.
Right. Right.
So that
Exactly. All right. So I think that I want to kind of ask you, what are some ways that people can increase their credit score? We talked about the importance of having a good credit score, what can affect it. If they have a bad credit score, what can they do to fix it?
so of course you got with us talking about the negatives, we have to talk about the solutions also. So I appreciate that. Um,
Hmm.
I think the first step in increasing your credit score is to review for you got to print out your credit score. You have to run your credit report. Okay, so you need to review for errors and discrepancies and also just see where you're lacking. What's going on? Because if you don't understand why your credit is down, how can you fix it?
Right. Right. And I know that people, they have apps out there, right, where you can check your credit score. They have like Credit Karma. They have a lot of banks. If you are you, if well for me, I have a credit card with the bank, and with that, I'm able to check my credit score. So some banks do have the option for to provide your credit score to you. But what you mentioned as far as a credit report, that is something that you can go online and do this once a year, annualcreditreport.com, type in your information, and they print out a credit report for you. You could do this free, right? Once a year, annual credit report. So at least I think the minimum of getting a credit report to kind of review all of the things that are on your credit report, at least once a year. I mean, you could do it more frequently with these other apps, but the official credit report, I think you should do that at least once a year for sure. That can help you get a view of what's actually happening on your credit report. So if there are things that don't belong on there, you can investigate. You can actually figure out why your credit score is what it is. It's just good to kind of know, and it's a good way to mitigate any type of like identity theft that you might think be happening, or if you recognize a lot of unrecognizable transactions, right? You can, investigate. So I think it's always good to just kind of have that information. So at least once a year, check your credit report, and it's free.
Nah, for
Mhm.
real, for
Mhm.
sure. Free, there's no excuse.
Right.
So some other ways to increase your credit score if you have not so favorable credit is to change your behavior. Change your behavior of what you in.
I didn't think you were gonna say that,
You
but
gotta
that's so true. I wasn't expecting that one, bro. Not first, but no, yeah, that's man. That is the most true statement, bro. You got to change your behavior. Go ahead. Go ahead.
you, you have to take accountability. You have to change your behavior. And when change your behavior, you got to make timely payments. So when bills come in, like I know these student loans are coming, everybody's like, "Oh, I'm not paying those." Hey, if you want good credit, you will pay those.
Right.
Will pay those. You might call them and see if they'll work with you, but at the end of the day, whatever they tell you have to pay, it kind of is what it is. And if you decide not to, because everything's a choice, if
Hmm.
you decide not to, just know that there are repercussions to that. There's consequences to every action that we do.
Right.
So
Right.
just prepare for that if you decide to pay them. Also, like Deshaun said, credit utilization is 30%. So you want to make sure that your credit cards are under 30%. They say that you should really, credit cards should be paid off because the interest rate is way too high on those. You're paying like 20 to 30% on credit cards, but they advise you to have them under 30%.
Yeah.
Also, you want to avoid new credit applications if you have bad credit, of course. And when it comes to credit cards, they have things like secure credit cards. If you are if you're not in that area of having bad credit, makes sense. But if you need something in order to start with so that you can get unsecured credit card, then a good place to start is a secure credit card. So with a secure credit card, they'll ask you to do something like put down a $500 deposit, and we'll give you this card with a $500 credit limit. So basically, you're borrowing your own money. So this
Mhm.
is where it's crazy. So when you use this money, you still have to pay it back, even though it's your money to begin with. So there, I'm sorry, did you?
No, I was just gonna say, I think what you led with made sense. Like, just try if you can avoid this, just don't. Because I, it's, the whole concept of secure credit cards, I think, is it's a good way to get out of a hole. But if you can avoid it, because go ahead, I just heard what you were about to say, and it made me kind of think. Go ahead, man. Go ahead.
So basically, you're borrowing your own money. If you miss a payment, even though you made this deposit, this $500 deposit of your money, and they give you a $500 credit limit. If you miss a payment, it still affects your credit negatively. Also, you're paying interest on this money to the bank, even though this money is secured by your money, that $500 deposit that you had. If you
You're
had
paying
spent,
interest on your own money to someone else, basically.
yeah, that's exactly what it is. You are
That's
paying
crazy.
someone else. So this is a way to build your credit if you have poor credit to work up to the point where you can get an unsecured credit card.
Hmm.
But this is not a good option if you are not in that area and you have other options.
Yeah.
All right.
Yeah. Cool. Yeah, and I think that I think you mentioned it as well, but if you're able to get credit cards, one way to which is kind of obvious, one way to build your credit is to pay your credit cards on time. Like avoid those late payments. Because as we saw earlier, 35% are 35% weighs on you if you receive late payments. Like that's a 35% ding on your credit score, right? And I'm probably saying that wrong, but it weighs 35% when you do, miss a payment on your credit card. So I think that avoid late payments at all costs. Like that's just of course like avoid late payments. We're talking student loan payments, personal loan payments, credit card payments, any type of payments where you are borrowing money and having to pay it back. Just on time, right? And they give you that minimum payment, so you don't have to pay the whole thing. They give you that minimum payment for that reason, so you don't have to miss the payment, right? You can give them a bit of the payment, which we still recommend you paying the whole thing off, so you don't get hit with interest. But everybody's situation is different, and if you're able to at least make that payment so you can avoid that late payment penalty, do that because that will heavily affect your credit score. So,
Right. So I also read that most businesses report the late payment after 30 days, but you still want to avoid the late fees, of course, because
mhm,
missing payments, besides affecting your credit, it's also expensive. Late fees are expensive. So just try your hardest to make your payments. Keep your credit utilization down. Have long credit. Don't close out accounts. Um, and also to have a mixture of credit.
yep.
Other than that, I think we pretty much hit all our points. What do you think, Deshaun?
I think that I want to talk. before we do close up, I want to talk more about in the instance that someone does have a late payment or they do get a hard inquiry. How long do those things like stay on? How do we? All right, so it's done. The deed is done. Late payment is there. Inquiry is there. How long does it have to stay on their credit report before it stops affecting their credit score, right? Because you can't just, it has to, once you mess up, it's like, okay, cool. You got to, it's almost like your credit score is doing time. You got to let it sit there. It's going to be hurt for a little bit, but it's not forever, right? Eventually it'll come off. So I wanted to make sure that we talked about those dates and because they differ, right? Depending on
Right.
the severity of the, uh, the the severity of whatever it was that happened for you to have that ding. So I think that's what I wanted to hit. I know at least for inquiries they stay on your credit score for about 2 years, right?
Right.
They stay on your credit score for 2 years, but I think I read that the first year is what really affects your credit score. After that first year, it'll show up on your credit report, but I feel like your credit score will bounce back within a year of a hard inquiry. But there are some more severe ones though that I know that you wanted to talk about too.
Right.
Mm.
So, of course, like Deshaun said, the hard inquiries stay on your credit report for 2 years. Late payments, why you should avoid them so much is that if you have a late payment, it stays on your credit report for 7 years. It's a long time. 7 years is a long time. That's almost a decade.
Yeah.
And if you decide if you're going through something and you have to file bankruptcy, this stays on your credit report for 10 years, a decade. So you're reaping the repercussions of these of your actions for so long. So we, as Deshaun stated earlier, we understand that everybody's in a different situation. Sometimes you have no choice but to have a late payment. Sometimes you have no choice but to file bankruptcy.
Hmm.
You understand, but if it can be avoided, and it's just you basically missing the payment, or it's just didn't move money around fast enough because you're not really caring. Uh, when it comes to those things, just make sure that you're trying your hardest to make the payments. Just try your hardest, right?
No, definitely. Yeah, basically we just want to reiterate the fact that having bad credit is expensive. Having good credit is beneficial. They always do those. Would you take this amount of money or would you take a higher credit score? And people automatically pick, well, I'm gonna take the money because credit score, that really don't credit score matters, people. It definitely affects the future, your future borrowing. It affects how expensive your borrowing can be, right?
Hold on, bro, because you just said something, and now I got to get your take on this because I saw a video, and you said something that I did not expect you to say. So we about to talk about this one, man. So if you could have $1 million or an 850 credit score, which one would you take?
I have my credit score is fine right now, so I will take the $1 million.
Wait, boy, not if you had a 600 credit score right now. If you could have $1 million or an 850 credit score, which one would you take?
I mean, I'm probably still gonna take the money, but hold on. But here's the reason why. Here's the reason why. I think that people automatically choose the money because they think that credit scores aren't that important. You can't. I don't know, man, because like you can still, even still borrowing that money is still paying. But yeah, nothing really beats cash. It was probably not the best example of me saying, "Do you want to choose credit score or money?" But
Man,
I was trying to drive home the fact that credit scores are important. Okay.
you you opened it back up, man. I had man,
Nah,
I had
I'm picking the cash. Always picking the cash. I'm sorry.
be,
You're right. You're right. Yeah,
because
but
I was watching this video and the woman said 850 credit score because then I could just borrow the $1 million. So I'm like, hold on, wait. So you would pass up $1 million so you could borrow somebody else? I'm just like, I don't get it.
Bruh, $1 million can get you a 850 credit score. You feel me? Like you don't. That's it's not even a question. It's not even a question. If you had that much money, you can get an 850 credit score. You can, yeah, yeah. So, nah, yeah, cash is king, bro. Cash is
Cash
king.
for
But credit score is important, right? Because we don't have the option of choosing between $1 million and 850. So we got to make sure that we have both, right? Decent amount of cash, but also the ability to borrow money when we need it at a decent interest rate. So we're not losing so much of our cash. So yeah, man.
all right.
You're like, hold on, bro. Nah, I gotta ask you this. Nah, I can't let that was.
All right. So have
Yeah.
we all our points to shine?
Yes, I think we did. There are other intricacies about credit score because I mean, other ways to boost is like to they have you know how when you're applying for a loan, they ask you like for a co-signer or
Yeah.
anything like that. So basically, if you don't have the best credit score, you could leverage someone who does have a good credit score, right? You can be an approved user on their credit cards. That takes a lot of trust because am I going to approve someone else to use my credit card? No. But I mean, some people, need that. I mean, people have made businesses out of it, right? They'll open up a credit card, allow people to kind of, use their credit, their positive credit as a way for helping someone else build their lower credit. Um, which I'm not sure how effective that is. I don't know how immediate the gratification is or how lasting that is because is it indefinitely you're on their credit card? But anyways, I just wanted to say that there are other hacks, I'll call them, to increase your credit score. I think everyone should do their own research and do their own due diligence when it comes to that. But the ones that we mentioned are the ones that are going to be lasting, right? Making payments, increasing your credit, or decreasing the amount of credit you use to increase your credit utilization, and the other three that we mentioned earlier. So I think those are the most important ones that people should take away from this conversation, right? With money, the get rich quick is not usually the lasting route. So yeah, I think that we're good, man. I'm pretty sure that we hit a lot of things when it comes to credit score. So yeah, I'm solid, bro. We can wrap it up, man.
So as always, I just want to tell everybody that we appreciate y'all for tuning in. Also, where you can find us is on YouTube and Instagram at Playbook LLC. Also, visit our website, investorsplaybookllc.com. Thank y'all so much tuning in to episode 7, right?
I was about to say you ain't say the episode at the beginning, man. We're on episode 7, bro.
7.
7. We've almost been doing this thing for 2 months strong, bro. Yeah,
Oh man.
almost 2 months strong. So yeah,
Oh, and
yes,
also we'll be at Taste Urban on the 18th, which is Wednesday, when this podcast drops or this show drops. So make sure y'all come see us if you swing by. And also we'll be posting how the event went on all social medias. So be prepared, and we appreciate y'all again for tuning in.
definitely, definitely. All right, y'all. Peace out.
Peace.